Good day, viewers. Welcome to another episode of Financial Accounting Made Simple. In our last class, we discussed the correction of error. Today, we are going to be looking at the suspense account. By the end of today's lesson, viewers should be able to define suspense account, list the uses of suspense account, and the procedure involving correction of errors. Also, we are going to discuss those errors that affect the agreement of the trial balance. In our previous videos, we discussed errors that will not affect the agreement of the trial balance. And lastly, we are going to be working on exercise of the correction of errors and suspense accounts. In the last class, I made mention of the trial balance, and the uses of the trial balance is to check the arithmetical accuracy of the ledger. Perhaps, if the trial balance did not balance, there might be a reason for the differences in the trial balance. And pending, when we will be able to identify where an error occurs in an account, we make use of the suspense as an hanging account to make sure the trial balance is balanced. Like I said earlier, today we are going to be looking at suspense accounts. When we say suspense accounts, what do we mean by suspense? A suspense account is an account that is used to record the difference in the account temporarily, pending when the errors will be detected and corrected. The suspense account is used to record difference in the trial balance temporarily until those errors are detected and corrected. Now let's quickly move to the uses of the trial balance. 1. It records the difference temporarily until errors are detected and corrected. 2. Provision of account for deferred expenses. 3. Corrections of error. 4. To keep a transaction for further processing. And lastly, to keep part of transaction with undecided entry. Looking at the procedure involved in the correction of error, the first step is to identify the type of error. The second step is to identify the two accounts involved in such transaction. Number 3 is to illustrate the error in the ledger. And number 4 is to correct the error. And number 5 is to apply the pedantry and scrutiny rule. And number 6 is to post the journal after correction. Lastly is the preparation of the suspense accounts. Now let's quickly look at those errors that will affect the agreement of the trial balance. Looking at errors that will affect the agreement of the trial balance, we are going to be looking at the one-sided omission. The one-sided omission is also known as the single entry error or the partial omission. Second, error of misposting of figures. Error of misposting of figures is synonymously to the transposition error we have in our errors that will not affect the agreement of the trial balance. Number 3 is two entries on the same side of an account. When you have two entries on the same side of an account. Number 4 is the trial balance error. The trial balance error. Number 5 is the error in the transfers of totals from the subsidiary books. Errors from the transfers of totals from the subsidiary books. And lastly is the casting error. The last one is the casting error. Let's pick these errors one after the other. One-sided omission or partial omission or single entry error. When an account is being recorded on one part, it simply means it's a one-sided omission. When a part of an account is being recorded and the other part is ignored, such error is a one-sided omission. The next error is error of misposting of figures. Error of misposting of figures is an error that occurs when an item was recorded on the debit side of an account with a different figures to what is being recorded on the credit side of the accounts. While the third error is two entries on the same site. When you posted two entries on the same side of an account, you have made a mistake in such account, which is known as two entries on the same side of an account error. And this same error is also known as partial reversal of entry. The next one is error of transfers in the total of the subsidiary books. In the process of moving totals from our day books, be it sales day book, purchase day book, return award or return outward day books, there is a tendency to make errors in the process of moving these totals from the subsidiary books to the ledger. And the last one is a casting error. Casting error is also known as error that takes place in the trial balance when you are summing up or adding up your entries. In doing this error can either be an undercast error or overcast error. Having looked at all these objectives, we are going to be looking at this question to buttress the suspense account. The trial balance of a fail showed a difference of 622 naira, and this has been carried on the credit side of the suspense account. Further investigation revealed the following errors and omission. A. Purchase of an adding machine for 750 naira was debited to office expense account. B. Discount allowed 784 naira have not been posted from the cash book to the ledger. C. Drawings in form of goods costing 800 naira have not been recorded anywhere in the books. 4. Sales day book was overcast by 100 naira. 5. An invoice of 523 naira received from a supplier was entered correctly in the purchase day book but was posted to the debit side of the supplier personal account. 6. A debtor who owed a sum of 120 naira died without leaving anything behind. This amount was written off his account as bad debt, but no other entry was made in the books. 6. A credit note for 620 naira issued to a debtor was entered in the return inward book as 260 naira and was posted to the ledger. 8. A payment of 130 naira for wages and salaries was entered correctly in the cash book, but as 310 naira in the wages and salaries account. 9. A motor vehicle was bought for 1,300 naira and the payment was made by check. This part was recorded only in the motor vehicle account. We are required to show the journal entries necessary to correct these errors and prepare a suspense account. Now, before preparing our suspense account, I want to bring us back to procedures involved a correction of error. Under the procedures, I made mention of the application on this rule, pedal and scroll G. In our previous videos, I remembered informing our viewers to commit the trial balance rule into memory. And the same thing is applicable to the pedal scroll G. And the pedal scroll G simply means pedal. Pedal means purchases. The E represents expenses. D represents debtors. A represents assets. And the RI represents return inward. All items that we have under pedaling must have a debit balance. This is to enhance and assist our preparation of our journal when we are posting. So this rule is more or less the trial balance rule that we'll be applying in the process of solving questions. While on the credit side, we have scroll G. Scroll G. S represent our sales. C represents creditors. RO represents return outward. L represents liabilities. And G represents gains. So if you come across the question like the one we want to answer from this exercise, items that have any of these must have this balance in the process of preparing our journal and suspense. So you can see we have the pedal scroll G. By virtue of the trial balance rule, sales must have a credit balance, creditors must also have a credit balance, return outward must have a credit balance, L for liabilities must also have a credit balance and gain a credit balance. While for the pedal, purchases must have a debit balance, expenses a debit balance, debtors debit balance, assets debit balance, return inward debit balance. So looking at our question, the first question says, purchase of adding machine for 750 naira was debited to office expense account. This is an example of error of principle. This is an example of error of principle. So since we are able to identify the error is error of principle, while the two accounts involved is purchase account, is an adding machine account and office expense account. So the purchase of adding machine of 750 was debited to office expense account. So in the illustration, because of his face that we cannot accommodate on the board, we might not be able to illustrate the question in a ledger. But from the illustration, initially, the office expense account is being debited and the adding machine account that ought to be debited is not debited. So to correct this, we debit the adding machine account and we credit the office expense account. So this type of error will not undergo suspense because it is error of principle. And error of principle is one of the errors that will not affect the agreement of the trial balance. Because of the space, I might not be able to put the narration, but you can add the narration whenever you are making your own solution. So the value of the other machine is 750 naira. So we debit adding machine with 750 and we credit office expenses with 750. The next question is discount allowed 784 naira had not been posted from the cash book to the ledger. Have not been posted from the cash book to the ledger. This type of error is a one-sided omission. One-sided omission, because that transaction has been recorded in the cash book already, but it has not been recorded into the discount allowed account. So in this case, the two accounts involved is discount allowed and suspense account, because it is a one-sided omission. So applying our Pedari scroll G rule, discount allowed falls under expenses. So it's going to have a debit balance, and the suspense account is having the credit balance. So I have discounts allowed which is how much? 784. And I had suspects, which is 784. So in the next question, drawings in form of goods costing 800 naira have not been recorded anywhere in the books of accounts. This error is an error of omission, which is a complete omission. This is not a one-sided error. The error is not even being captured at all in the first place. So it's a complete omission. So error of omission. So the two accounts that is involved, since it is drawings and purchase account, because what is being drawn is goods, and such goods is classified as purchases. So drawings and purchase account. Here we are going to have our drawings and purchase. Drawings account and purchase account. So goods are being drawn from the business. So applying your double-edged three rules of debit the receiver, credit the giver, will be empty drawings account with 800 naira and credit purchases with 800 naira. The next question says sales day book was overcast by 1,000 naira. Sales day book was overcast by 1,000 naira. If you look at our Pedari scroll G rule, sales is going to have a credit balance, right? So in this case, the two accounts that will be involved is sales account and the suspense account. So since it is being overcast and sales is going to have a credit, the suspense we are using to do the correction will be credited. So we have sales account and the suspense account. How much is the value? That is 1,000 naira. The next question says an invoice of 523 naira received from a supplier. An invoice of 523 naira received from a supplier was entered correctly in the purchase day book, but was posted to the debit side of the supplier's account. It simply means this error is a misposting of figure. Misposting error. Because if you look at this error that we are talking about, it is an error where the creditor that is giving out is still being debited. So in this case, we are going to have the trade creditor and suspense account that we are going to work on. So for trade creditor, which we also known as creditor in our predominant protein, we are going to credit trade creditor and debit the suspense account. So we have suspense account and we have the creditor or trade creditor. So for suspense account, the value is how much? 523 naira. But one thing we should understand is that the invoice, which is received from the supplier, it was being entered correctly in the purchase day book, but was posted to the debit side of the supplier personal account. So these are errors that this error of 523 naira will be because it is being wrongly debited. So we need to return it back. So in returning it back and to credit the trade creditor, the value of 523 will be multiplied by 2. So we are going to have 1,046. The next question, a debtor who owed a sum of 120 naira died. So once a debtor is dead, it simply means that debt has turned to a bad debt. But no other entry was made without leaving anything behind. The debtor did not leave anything behind, so the debt is being classified as bad debt. So this amount was written off his account as a bad debt, but no entry was made in the books. So we have bad debt falls under expenses, which is a debit balance, bad debt account, and the suspense account. So the value of the debt is 120 naira debit for bad debt and credit for suspense account. The next question, a credit note of 620 naira issued to a debtor was entered in the return inward book as 260 naira and was posted to the ledger. So we have two different figures here, and this is error of misposting. So when it is error of misposting, you have to take out the difference between the two figures. So we have 620 naira is the credit note issued to the debtor, but it was recorded in the return book as return inward book as 260 naira. So for the two error involved there, we are having return inward and the trade debtor. Return inward and the trade debtor. So you have return inward and trade debtor. Return inward and trade debtor. So in this case, we have 620 naira minus 260 naira will give us 360 naira. So 360 naira, we are going to debit our return inward and credit our trade debtor. Already, we understand that when a goods is being returned to the seller by a customer, which automatically is a trade debtor, it's going to reduce what the customer is doing. So the return inward is going back to the seller, which is receiving. So we debit the return inward account and credit the trade debtor's account. The next question, says a payment of 130 naira for wages and salaries was entered correctly in the cash book, but as 310 naira in the wages and salaries account. The transaction is being recorded correctly in the cash book, but was recorded as 310 naira in the wages and salaries account. So similar to the first question, we are going to take out the difference of 310 naira minus 130, which will give us 180 naira. So the two accounts involved now, because it is the wages account that is being affected, not the cash book. So the two accounts involved now is wages account and the suspense account. So here we are going to have the suspense account and the wages and salaries account. So the suspense account will be debited with 180 because wages and salaries is an expense account, and we credit it here with 180. And the last question, a motor vehicle was bought for 1,300 naira and the payment was made by check. This part was recorded only in the motor vehicle account, which means the cash of the bank account is not being captured. So this will be a suspense account and the bank account. So here, the suspense account and the bank account, which is a suspense 1,300, bank 1,300. And this brings us to the end of the journal preparation. So we now prepare our suspense account. So in preparing our suspense account, I will be taking out this. So the first step is to prepare our journal, which we have done. And the second requirement is to prepare our suspense account. So in preparing our suspense account, we will now go back to our initial questions. The question says, the trial balance on the pen showed a difference of 622 naira. And this has been carried to the credit side of the suspense account. So we are going to have a balance brought down on the credit side of our suspense account. 662 naira. So after putting the balance that we have from our question, the next thing is to go to our journal and move all the items that go through the suspense. Only items that goes through the suspense will be recorded in the suspense account. And mind you, we should post the item on the side they are in the journal. If you look at this catalog and suspense account in this transaction is on the credit side. So we come to the credit side of our suspense account and we write discount allowed. which is 784. We skip the first question because this one did not go through suspect. This is an error of principle. So it will not go through the operation of suspects. So we are going to skip it and move to the next one, which is discount allowed as suspects. This one as suspects. The same thing is applicable to drawings and purchases. It's not going into suspects. So we go to the next one, which is sales and suspects. So for sales and suspects, we have sales 1,000 naira. Also, we move to the next question, which is trade creditor on the debit side. So we add trade creditor. Trade creditor, which is 1,046 naira. And the next one is bad debts, still on the credit side. So we have bad debts. Bad debt, 120 naira. And the next one is return reward and trade debtor. So we're also going to scale this. So we move to the next one, which is wages and salaries, which you have on the debit side. Wages and salaries. That's 180 naira. And the last one is a bank account. Bank, which is 1,300 naira. Haven't embedded all this or completed all this in our suspense account. All we need to do is to summon. We cast the figures and they must have the same figures. There is no balance carried up, there is no balance brought up in suspense account. So by the time you cast it, you have the same figure. So by the time we add off what we had here, 622 plus 784 plus 1,000 plus 120, we're having 2526. And for the debit side, you have 1046 plus 180 plus 1300. We have 2526. So having done this, we have completed the requirements in the question we are given. And I believe we have learned and you have gotten a lot of experience from this topic. If you have any issue with respect to this topic, just send a message through the comment section on our videos in our YouTube channel. Thank you for watching. See you in the next episode.